Now into earnings season officially since last week, banks kicking off, and VIX expiration this morning with a big shake and bake yesterday in the market, which we talked about with ASML. In fact, we had just sized up a NVIDIA financed call spread for clients early last week, and this is gyration, if you will, into earnings and election and year end. Oh my.
You really have to kind of know which miner you're trading. So I prefer to kind of get into the bigger proxies, the MSTR, which is probably the best one. But the problem is it sort of went. So we had Bitcoin kind of coiling here when I originally put this trade on. And so I had a nice pass MSTR. I think the trade made 220% or something. It could have made 400. So I was irritated with 220%, which was kind of funny. But it kept going. And then this is what happened. Here's your MSTR versus Bitcoin. Look at this outperformance that we had here. It just went sort of bananas to the upside and then consolidated. And I was looking last Friday, I was looking at these charts and I said, and originally I suggested an upside financed call spread in MSTR. And I said, well, hold on a sec. I put it in the chat and I said, wait a minute, there might be a better play on this. And I looked at coin. And so here's your coin versus Bitcoin. So while MSTR was going crazy to the upside, we had coin really lagging behind. It was down in here. And I thought, well, this might be the better play to take. And so what we did is we put on the coin risk reversal. So this is in the chat on Monday. I said, I'm adding the coin sell of the June 2025 150 put and adding the 200 310 call spread for even money. So you could sell the put and buy the call spread for nothing. You get it for free.
We talked about this Tuesday as well. So this has just been banging it out every day.
And it's and the amazing thing is, Samantha, the MSTR has actually pulled back from that 220 down to like almost 190-ish, 191. And I've got the free puts there that I'm going to tell you about in a moment. But yes. I thought, okay, let's get in here. Here's our risk, actually our CLSK, just to show you that I'll trade other things too. That's a Bitcoin miner. We got in for 9 cents and I took half of it off at 140. I think it's up to 165 on the other half today. So structure was selling the 7 put to get into the 911 call spread. It's a very similar call, very similar structure. And then what I started to see was that this coin skew was really steepening. So remember a moment ago, I said, it's interesting. Once you start to see things suddenly steepen, that to me is a sign that there's probably flow coming in, buying that upside. And then market makers are selling and then having to hedge with stock. And that can kind of create this sort of positive feedback loop and things start to move to the upside because of it. And so I thought, well, MSTR had its run. Let's put the coin on. And by the end of Monday, it was up 4%. And I think it's up 9% now because it's just kept going. So sometimes, you want to kind of look at where's the juice left within a trade. We did this for a client on Tesla the other day, and it saved him 35 grand, this sort of upside. It's sort of almost replacing stock in a way. So instead of owning 2,000 shares, he reduced his position to 1,000, and we still created a similar amount of upside. And when Tesla kind of wet the bed, it saved him a whole bunch of money. So before earnings, I kind of sold out some really fat vol in here. It swung around. I scalped those calls for some decent money. And then it did this. It kind of consolidated and moved slightly down. And I thought, all right, this is a period where I don't want to get involved, partially because the volatility was very low. So in this period here, we had Palo Alto kind of move down over a few months. Vol was very, very low and not compelling. And so one of the things that I teach members and students is that, look, when you're not being given compelling edge, don't do it. The reason we want to own good stocks in our long-term portfolios is because we want to give them a chance to do well for us. So don't get in the way. Now, what happened? We got back to this old level of earlier in the year in February. We reached this kind of 375, 380 level. There's my edge. In here, I have no edge. Why would I sell calls in here when it's pointing straight up? And the sector's hot again? So I'm going to sit back and I'm going to wait for some edge. We get to this point. I hammered out some 390 calls for November 7th. I think I got about $7 for them. And now it's consolidating. That doesn't mean it isn't going to go up, but I was waiting for some edge, which was also bolstered by higher volatility. Back when it was in the 25th percentile, it didn't interest me, but now it's at 50. The stock's hitting upside resistance. That to me is enough edge for me to sell at some calls. So I just wanted to give people this example of don't sell calls cover calls if you don't have a good reason to. And if you're not getting paid many dollars for them.
So why did you use November 7th for Palo Alto calls at 390, which I understand the level of 390, just kind of real quick.
390, a little bit above where we are.
So same thing. This is your wedge on a daily. And we had
Yeah.
the same kind of review in the trading room, which was it was forming a Morningstar reversal off the 100-day. All it needed to do was get above
Yeah.
and then stay above, a little shake and bake, and then follow through. We got a Bollinger Band expansion. We've got the 3-day. I know Archna was all over this, Namita. This was basically the price target up here, a little trend line, but more importantly, your 380.84 exactly, which is the prior high in February, right?
Yeah.
So this is where you decide to sell some calls above it at 390. I get this.
I think it starts to melt away. But what I think is interesting is that people are, of course, the October VIX has expired. So people are going to focus on November now. Now, while November looks past the election, because of this volatility echo that I'm talking about, this recency bias, people remember this event, these couple of events that happened, they're going to want to continue to probably hedge themselves. So I don't see the VIX really coming down as much as people think it might. I don't think we're heading to 15 anytime soon, or 14, even though we typically do going into the holidays and everybody goes to sleep and it's time for eggnog, so things relax. I think we could see maybe a bid stay in there on VIX. And so that's why when we're looking at hedges, so let's talk about a couple hedges here. We could look at something like a VIX let's do the VIX first. So we talk about hedges in the community too, because we're all about grabbing income from options, but hey, let's do it in a smart way and let's think about downside. Always have one eye to the downside. And the VIX has been very reactive. We talked about this last week, how the beta of the VIX to S&P is off the charts. So we're getting that nice reaction because people are very nervous, like the cat in the room full of rocking chairs. So VIX is giving us that reaction we want.
Join Hans Options education course by scanning this QR code or by clicking on the link in the description. Watch the full options macro to micro power hour episode by clicking on the video here and subscribe to LaDuc Trading YouTube channel for more content.